Welcome to Digital Asset News. Take the top stories in crypto, current digital assets, and break them down into bite-sized pieces. Today, pretty much a sideways day. Not too much going on, just the basics. Looks like we are trading sideways. And in this time, I always get a little bit nervous because there are just so many things going sideways. We got Bitcoin at 0.03% gain. Tether. Litecoin is down a little bit, EOS, and really the only thing that's really up is Binance Coin. That was probably because of the notification that they're going to do futures and options and things like that in this kind of a trading challenge. So that's great, good for them. And what I feel is like when all these things are happening and there's just a big compression or just sideways types of action, I feel like there's something brewing in the background. And I need to talk about something today that I think is going to make a huge difference into where you go in the future. There was an interview, and this is from London Real. This is a show I watch every so often on YouTube, and they had Robert Kiyosaki, and he is the creator of the Rich Dad Poor Dad series of books. He's got a pretty much an online empire as far as financial education, and I was just listening to it. And a lot of the things that he was talking about made a lot of sense. And in the very end, what he's going to do is lead you down the path of investing into really cryptocurrency and digital assets and Bitcoin. And when he talks about these things, it makes you realize just how much you really don't know, or even if you did know, there's a big difference between knowing something and truly understanding what is behind it. So I think this is one of those videos that is super important and will lead you to a natural conclusion of where you should go. So we're going to go everything from the Fed is a scam to how we got there as far as the education that you and I were involved in, the things that are going on as far as quantitative easing, hyperinflation, and it's going to lead you to one inescapable conclusion, and that is you need to get out. You need to get out because you're getting played and you're going to get screwed out of your money. So let's take a listen to this interview. I chopped it all up, and I did that because it's just too long. So I just put it into small little segments. So let's take a listen. And then before we start, I just want to say that I've sped up the video itself because Robert talks super slow, and then London Real, the other gentleman, I forgot his name, he talks super slow. So I was listening to these things at like 1.5x, and it actually sounds like a normal person's talking. Let's take a listen.
What was my mission at that point? To bring financial education so simple that the average person could understand it. So I wrote this book, Rich Dad Poor Dad. It was turned down by every publisher in 1997 saying you didn't know what you're talking about. I knew what I was talking about, but the academics don't. And that's the problem. They're running the Fed. They're running our government. These Larry Summers and all these guys, they're criminals because they think they're smart. They're ignorant.
Right, and you posted something on Instagram and Twitter talking about the Federal Reserve Bank, saying that it's not a bank, it's not federal, and there are no reserves. And it was something created by a group of men in a back office somewhere in 1910, and yet we kind of revere it as this all-knowing, all-powerful. I think you made the analogy of the Wizard of Oz, where everyone just fears it, and we say it's doing the right thing, but we don't really know what it's doing. And when you start to look, as you said, behind the curtain, what was the analogy you made?
It's a midget.
Right, it's someone pulling strings.
But when I talk to young,
it's someone pulling strings, and essentially that's what it is, and that's what we're seeing, what is happening right now. Quantitative easing, $6 trillion going into debt. They're just kind of playing the game, and they think that they are the smartest people in the room. And what's going to happen is, I think it's going to be severely detrimental to not just this country, but countries around the world. So let's fast forward when we start to talk about well, how did we get here? What happened? How did this happen to you and me?
And then the question is, what does God want done? And for me, I'm not saying to everybody else, what does God want done is we need financial education, because the real problem of this crisis started back in 1904 when the richest guys on earth took over the education system in the United States. They formed a thing called the General Education Board. It was formed by guys like Rockefeller and J.P. Morgan. And what they pulled out of education was financial education. And so the reason they could rip us off, as you and I know, is via the mechanism of money. And that's why I wrote Rich Dad Poor Dad. It was a warning shot across the bow back in 1997. It said, wake up, something's coming down the road. So we're here right now. This is the biggest transformation issue in the world. It's from industrial age to information age. Brian Rose is doing well because you made the transition. I'm doing well because I made the transition. I'm making more money than ever before. I have problems, but I'm making more money than ever before. But if you're losing money right now, the problem starts in what you were taught in school. Because they never taught you anything about money. They never taught you about a financial statement, like my rich dad did. They teach you that diploma is everything. It's a piece of toilet paper.
So a couple of things here. First of all, I don't know where you're at. I don't know if you are in Canada, if you're in Mexico, if you're in India, if you're in Europe, Spain, wherever you're at, U.S. In the U.S., they do not teach finance. They do not teach anything that has to do with that aspect of education. Now, they'll teach you trigonometry and calculus and things that the majority of us really don't use moving forward. So when he talks about like, how do we get here? It's because mostly they keep you in the dark, and you don't get to know these things until either you go into college or, like myself, you have to learn these because of business. So when you see what's going on, it's because they have done this in the background to pretty much pull the wool over the eyes, and that's pretty much how it's done. So now we're going to talk about like, well, what does that mean? So if they take that away, what does that equal out as far as the society?
Right now with these stimulus packages is all of this money being given, quote unquote, away by the government to everybody is actually devaluing your dollar, it's devaluing your pension, it's devaluing your savings, and it's wiping out businesses. So it's you're dying by this sword.
Yeah, and the harder you work for money, the poorer you're going to get. That's the tragedy. So this is how what Fuller talked about, the prison is inside our head, Buckminster Fuller. It starts with misinformation and misorientation. Misinformation, misorientation. And he says, how dare our schools punish kids for making mistakes? How else do you learn if you don't make a mistake and learn from your mistake? He says, God designed us. I'm not real religious, I'm not preaching here, okay? God designed us to learn by making mistakes. For instance, a baby learns to walk by falling down. Baby learns, to ride a bicycle by falling off the bicycle. Tiger Woods, the greatest golfer ever in history of the world, because he made more mistakes than you and I did. But our schools punish you for making mistakes. That's misorientation, misinformation.
So then here we go. So we're talking about hyperinflation, these stimulus packages. If you're not in the United States, right now they just approved essentially a $6 trillion package to stimulate the economy, which is an enormous amount of money. Where's this money coming from? It's coming from thin air. The Fed is just printing, and it doesn't really matter. And then we're going into a massive debt, which could lead to a huge economic collapse, or maybe even economic reset moving forward because of how much money is being printed, because of the GDP, because of the low GDP, and of course the debt, which we are accumulating at a massive amount. So what does this mean in the long term, or what does this actually mean for? As far as, the younger generation.
And that's because our schools were basically built to create workers that will do what you tell them to do because they value this thing called money. And they think that's going to allow them to live a life. And that's obviously completely wrong because the rich don't work for money. The rich create their own wealth. And when a time like this happens, it becomes blatantly obvious what's going on with the people that are understanding money and the ones that aren't. Is that right?
Amen, brother.
So let me ask you this. Why did you get into cryptocurrency? Why were you drawn to digital assets and cryptocurrency, to Bitcoin, to Ethereum, to XRP, to Chainlink, to Tomato Coin, to whatever else, BNB coin, to all those things that are out there, Tezos? What drew you to it? Was it because you thought it was a great investment? And maybe you still think that. I still think it's obviously a great investment. Or did you think it was a good investment, plus you had this sneaky suspicion that fiat currency was at some point going to collapse, or was going to be devalued so greatly that you needed to hedge your bet and get into something else that would probably be the future? I mean, we look all around us. What is going on all around us? There's a digitalization of our, not just of our economy, but of course all the information. Everything is being shared globally throughout the world. Now it's just astounding to me that you cannot share your bank, the funds that you have in your bank across the world without it taking, days, or it just makes no sense. So when we see these types of things happening, we're like, for me, why I got into it, I could see where it should be. And there was a big gap of where I thought it should be and where it is not. And I feel like a lot of you are with me in the same journey because you think like, look, there's a better way to do things. There's an easier way to do things in a more transparent way. And that's why we're all here. Just my 2 cents. So what we're going to talk about right now, what Robert's going to talk about, is the crux of this whole interview. And he's going to pretty much lay it out like how much is being printed, how much money is being devalued, and why, and this really comes down to the heart of it, money or dollars or fiat will be worthless in a couple of years.
And so you're saying these bailouts are helping the rich is what's happening here.
It's to take away the debt, a mortgage. It's 2008, it was, those credit default swaps. It was for residential real estate, so they bailed them out. This next crash is for the hedge funds and private equity that invested in all this commercial real estate. So I have another $100 million project coming up. I just got bailed out. I just got backed up by the Fed and the government. So that's why it's socialism for the rich. Unfortunately, it's capitalism for the poor middle class.
I want to stop this right here, because socialism for the rich, individualism for the poor. That is a prime statement, and it's nothing new. It's been around forever. And the first time I heard it was reading my history books, when I learned it from Martin Luther King Jr. said this. And it's the same thing. The country has socialism for the rich and rugged individualism for the poor. And you can look around and you can see all these different bailouts that happened before. It was amazing. You could bail out banks with no problem, and nobody would ask, like, how are we going to pay for that? Well, they're just too big to fail. And then they would give money. And now in this bailout, you'll see 350 billion, somewhere around there, that is given to the individuals. But yet you have like 50 billion going to one company, 60 billion going to another, 35 going to another. And it's just like, well, what happened here? Oh, well, we can give them because they're huge corporations and companies. Well, that's socialism. That's socialism. That is socialism for the rich, rugged individualism for the poor. And we've gotten screwed time and time and time again. And it's about this time that now that we have options, that's why Bitcoin was made essentially in 2009. That's why the white paper was created by Satoshi Nakamoto, whoever he or a group of them or she is. It was because the crash 2008, there was no other options. Now there's options, and the genie's out of the bottle. And that's why when I hear these types of things, it just totally makes sense. Let's move on.
That work for money. You're on your own.
Right.
You know, if you own a small restaurant and you got to let go of your staff, you're no different than your staff right now.
And so how does this play out for the average worker, Robert, for the small business owner? I mean, what does the next 3 months look like? Because it doesn't look pretty. I mean, people are already being laid off, made redundant. There's no cash flow in most of these businesses. How does that play out?
Well, let me give one more stat, just to give you the size of it, okay? The national debt for World War II was $25 billion. Every day they're printing $125 billion. Every single day. That's like 5 World War IIs per day. They're printing so much money to keep this, think of a hot air balloon with a tear in it. And they're doing desperately trying to fix this tear, but no matter how hard they try, the tear has gone beyond. It's coming down. So in financial terms, it's called our debt to GDP has now gone from 60 to 90 to 105. It's going to 120. We're bankrupt. And they're going to print more and more money, which means savers are losers, just as I predicted. Your money's going to be worthless in a few years.
Savers are losers. And it's the truth. You put your money in a savings account. Let's say you did it in 1970. You're like, hey, I got $1,000 and I put it in the bank account because it's worth a lot of money. How much is $1,000 worth now? I mean, it's nothing to sneeze at. But $1,000 in 1970 and $1,000 in 2020 is a huge difference of the buying power of those individual fiat currency. And this just leads me to one question I have. What's GDP? Because this is going to play a central theme in a second, so I have to explain this. And before I move on, and let me just say this. Socialism, there is democratic socialism and everything else, and communism, whatever else. I am not in any kind of like political stance on that. I just care about if things work. And in some situations they do work, some really don't. But in the comment section, don't bombard me with like, oh, you're a socialist or whatever. That's not what I'm saying. That's what I'm saying. I'm saying that it's amazing to me that some places they demonize socialism, but it's okay for a huge corporation to get bailed out with no strings attached. That's what I'm trying to say. It's just not right. All right. So the GDP. So there's really 5 ways to measure the economy. You've got these 5 parts. The U.S. nominal GDP, which measures the economic output of an entire country. The real GDP, which is the GDP without inflation. That's important. That's really what they use. GDP growth rate, which measures year-over-year % increase of economic output. And the GDP per capita estimates the standard of living. And finally, the debt to GDP ratio. This is what people talk about all the time. It determines whether the income or the annual income can actually pay off this debt. And this is the most important number. So let's break it down. So the U.S. GDP, the gross domestic product, was $21.73 trillion for the fourth quarter of 2019. Okay, that's a big number. 21, just remember 21 trillion. Okay, blackjack, 21. U.S. GDP is the economic output of the entire country. It includes goods and services produced in the U.S., and there's 4 components. And this is personal consumption expenditures, which are all the goods and services produced for a household use, is essentially 2/3 of the total GDP. 2/3. So like exports, government spending, business investments, that makes up the other 1/3. Okay, business investments purchased by the private sector, government spending, which is hugely enormous, federal, state, and local, and the net exports, of course, whatever America exports, which I don't really know exactly how much we really export. We sure do import a lot, though. The real GDP, the U.S. real GDP was $19 trillion. And remember, that is the nominal GDP. It strips out the effects of inflation. So that's the real number, 19 trillion. That's why it's usually lower. It's the best statistic to compare the U.S. output year over year. That's why the BEA uses it to calculate the GDP growth rate. Great. It also uses to calculate GDP per capita. Capital. So the growth rate, the current GDP growth rate is 2.1%. When I read that, I'm like, that seems kind of low. Is that really that great, 2.1%? Well, yes, it is. The indicator measures the annualized percentage increase in economic output since the last quarter. It's the best way to assess U.S. economic growth. The ideal growth rate is between 2 and 3. Stronger growth means it's a boom. Slower means it's a bust. And if you have anywhere outside those realms, it's a boom or bust. So anywhere between 2 and 3 is fantastic. And we were at 2.1%. Everybody's happy, or so we thought. GDP per capita. For Q4 2019, the U.S. real GDP was 58,392. That's per person. This indicator tells you the economic output by person. It's the best estimate of the standard of living. And in 2017, the United States ranked 19th for GDP per capita compared to other countries. I think I looked up another figure in 2019. It was around 13. So not the best. You would see like the best, and actually like Qatar and those types of places. Was it Singapore? Yeah, I think Singapore is like up there, like top 3. So the debt to GDP ratio, this is what all comes down to. The U.S. debt to GDP ratio for Q4 2019 was 107%. Let me say that again. The debt to GDP ratio was 107%, meaning we had more debt than we have for the gross domestic product. That's the total public U.S. debt divided by the nominal GDP. Bond investors use this ratio to determine whether a country has enough income each year to pay off its debt. This debt is too high. The World Bank says that debt that's greater than 77% is past the tipping point. Let me read that again. This debt level is too high at 107%, and this was written before we just had a $6 trillion bailout. The World Bank says that debt that's greater than 77% is past the tipping point. That's when the whole nation's debt worry that it won't be repaid. Demand is too high. Higher interest rates to compensate. Let me read this. They demand higher interest rates to compensate for the additional risk. When interest rates climb, economic growth slows. That makes it more difficult for the country to repay its debt. The United States has avoided this fate so far because it has a really strong economy. So my question is, well, who owns the debt? Who owns the debt? Who has all this debt? If it is so much, well, here's who owns it. Here's the breakdown of 21 trillion U.S. debt. U.S. investors, they bought it up and they own about a third, 32.5. The Federal Reserve has a debt, 2.38 trillion. Okay, U.S. government has a big chunk, 27%, and that's the majority. But then you have these things called foreign investors, and these foreign investors are, guess who number one is? China. China has 5. And probably higher than that, maybe even 6%, maybe 8% or 10%, who knows? Because you can just kind of look at China, Japan, Brazil, blah, blah, blah. Sure, great. The Chinese government or Chinese investors likely own even more U.S. debt purchased through entities in other countries such as Hong Kong, Luxembourg, or the Cayman Islands, all of which are havens for tax shelters. So when you look at this type of thing, you're like, this is who owns the debt. A lot of it is America owns its own debt. But here we have these foreign investors. And what would happen if, I don't know, they say, we're calling on our markers. You need to pay us. You need to pay us or you're going to default. And then we're going to have to start taking things. And that's how it goes. Because you could be called in. And that's just what it is. So let's move on. If you review the national debt by year, you'll see that the other time the debt to GDP ratio was this high, which is 107%, which I can't wait to see the new numbers, that was to fund World War II. That's when it was actually higher. Following that, it remained safely below 77% until the 2008 financial crisis. Even though the economy is growing at a healthy 2 to 3% rate, the federal government has not reduced the debt, and it keeps spending at an unsustainable level. And that's just exactly what's going on. So all this time that we had this great economy and there's everything going on, what happened? Why didn't they pay it down? They're just like, no big deal. We'll do it later. That's something that I would do around my house. But I'm not the U.S. government. They should have, I don't know, been a little prudent and try to pay it down. Just my thoughts. What do you think? Tell me in the comments section. So this part here, I need to fact check that. And I took a look at, let me go up here, the national debt by year compared to GDP and major events. This was a pretty good one. That the GDP ratio gives insight into whether the United States has the ability to cover all its debt. A combination of recessions, defense budget growth, and tax cuts has raised the national debt to GDP ratio to unsustainable levels. So any debt GDP ratio above 77%, what we just talked about, is considered a tipping point. Just remember that. All right, so I want to show you something unbelievable. The debt in 1929 was $17 billion. That's it. It was 16% the debt to GDP ratio. Can you believe that? That was during a market crash in 1929. And then it went up to, well, actually, it went down to 16 trillion. Or 16 billion, I'm sorry, not trillion, billion. The debt to GDP ratio, 18, 22, 33, 39. What happened here? What happened? Why did it jump so much here? This is because the FDR's New Deal. And when I talk about this FDR's New Deal, I'm going to draw some comparisons and conclusions. Tell me what you think. If this isn't history repeating itself. So real quick, the New Deal summary. The New Deal is an economic policy FDR launched at the end of the Great Depression. Americans battered by 25% unemployment, dust bowls, droughts, and 4 waves of bank failures welcome the government's rescue. Does this sound familiar? The only difference is that the Great Depression was caused by a stock market crash and panic selling. People just got out and lost their minds because it was just like tumbling down. It was the exact opposite of FOMO. This economic downturn is caused by the coronavirus, disrupting most areas of business. These businesses are otherwise healthy if they could just be open for business. And you can see it all around. You can see it in just local restaurants, in beautician places, hairstylists, nail salons, all these different little niche shops. They can't be open. A Target, those type of places. Well, Target I think is still open. But a lot of them have to close down because of the coronavirus. Now, they're not unhealthy. They just need to stay open, but they can't. So this is the problem right now, and this is why we had that big stimulus package passed. So what happened? What were the things that they did in this New Deal? Well, the first thing they did is they go, look, we're going to do an emergency banking act, and you got to prove that you are healthy enough to open back up. This act allowed banks to reopen once examiners found them to be financially secure. So what's going to happen is later on, instead of financial security back in for the New Deal, to check back if it opened up, it's going to be a health screening in that area or city. What that means is they're going to do some kind of like health screening to make sure that it's okay for this to open. Whether that be individuals, I don't think it's going to be like that. I think it's going to all go by numbers, the percentage of that are infected, the death rate. As it starts to fall down, then these businesses will be okay to open up. That's what's going to happen. Government Economy Act. What they did here is they cut the pay of the government and military employees by 15%. They cut government spending by 25%. And that billion that they saved went to finance the New Deal programs. Now, this will never happen. This will never happen because our government is way too corrupt to take a pay cut, even though they all should because they're all incompetent. Next part, the Beer Wine Revenue Act. It legalized the sale of beer and wine and taxed alcoholic sales, raising federal revenue. This followed by the passage of the 21st Amendment, which effectively ended the prohibition. So if you think about that, the prohibition of the 20s is the legalization of marijuana in the 2020. So if we can get marijuana legalized, imagine what we could do as far as pulling those funds in and taxing those types of entities and the actual product itself. Now, marijuana, I can just tell you right now, it's not legal in my state, but it seems like everywhere else it is. Now, there's different parts, but it's either legalized for recreation or medical use, or it's going to be voted on in 2020. What makes you think that they won't start to legalize more marijuana throughout the entire United States just to boost revenue? Because we are in an enormous amount of debt. Why wouldn't they do it? I bet they will, and that's going to be good news for, well, most of my friends. I'll just be honest. Next part here, they did a civilian conservation corps. Through April 5th, this program hired 3 million workers over the next 10 years to conserve public land, planted forests, built flood barriers, and maintain roads and trails. What does this sound like? Well, it sounds like the $2 trillion infrastructure plan that is part of President Trump's initiative. So you see the parallels here? Well, they did it back then. They're going to do it again. And then it's going to start to do as far as like history repeating itself. And then the abandonment of the gold standard. April 20th, FDR stopped the run on the precious metals. He ordered everyone to exchange all gold for dollars. Now what do you think could happen? As time moves forward, maybe they do this. Let's do a cryptocurrency digital asset standard. We're going to put in these dollar bills, and we're going to start to use more and more of cryptocurrency and digital assets for a number of reasons. First of all, it's way more efficient. It's cost savings. Oh, and then the third thing is that as we use more money, more of that virus is transferred on from money to hand to mouth to eyes. And then, of course, you get more infections. So if you look at all those things, it's easier to use. It's cheaper to use. It's a better asset to use. And then it's going to cut down on infection. Why wouldn't they go to it? They almost did it with the Digital Dollar Act, but it got cut out of the very last bill. And that's that for that part. Let's go back. All right, closing in. This is the most important part. And this is what really opened my eyes and really made me want to share this video with you, break it all down, give analysis, because of the next 3.5 minutes. And it's going to show you why you need to get out of these markets. Let's listen.
I followed this book when I saw right after 9/11, I saw the next thing come in, Rich Dad's Prophecy. And I said the biggest financial crash was going to come in 2016. Now, I didn't foresee quantitative easing, but we didn't have, back in 2002 when this book was published, there was no quantitative easing, and there was no zero interest rate policy. And I went, oh my God, and then Trump got elected. So this was postponed 4 years. It's here today. Rich Dad's Prophecy is more true today than ever before. And it's about why the biggest stock market crash in history was still coming. Wall Street Journal trashed me. They took me to the cleaners. Said, you don't know what you're talking about. And I don't blame them because I was threatening their nest. You know what I mean? So I wrote this book so it's here today. The point here is this, as you and I know, because we've seen Inside the Machine, we've met the wizard. The real problem isn't the stock market. The real problem is the shadow banking system. The banking system, the financial markets we don't see, you know, which is the repo market, the consumer corporate credit market, and then the commercial paper market. They're broke. So this stuff was happening in September last year. But they keep hyping it, you know, CNBC and those guys. I know they have a job to do. They keep hyping this market up. So the market was hitting great peaks. And so I told my friends who have 401ks and IRAs and all this stuff, I said, hey, did your financial planner call you in December and tell you to get out? No, they told you to stay in. They told you to stay in. And meanwhile, the stimulus package comes in. It jacks the price. After it started to deflate, the stimulus market came in. They popped it up again so guys could escape. So the rich could escape. Meanwhile, they're on CNBC telling you, stick it out, stay for the long term. You know, the market will bounce back. Oh, give me a break. Are you that stupid? Can't you see what they're doing? And the fact is they cannot. So this crash, as you know, just prior to this crash was called the everything bubble. Stock market was high, real estate was high, I don't know what else was high, gold and silver, everything was high. The trouble now, everything's deflating. I'm in serious trouble financially at one end because I own hotels and I have 8,000 rental units. Today they're not paying rent. Now, does that affect me? Of course it does. But the way my rich dad taught me to play the game is I have LLCs and S corporations and C corporations. Corporations, I hide behind that. So I own nothing technically. They can sue me for my money, but they'll sue a limited liability corporation. They can't touch me. So this is what I taught in Rich Dad, Poor Dad. So it's not the asset. I have businesses, I have real estate, I have stocks, bonds. I don't have any stocks, bonds. I have gold and silver, I have oil. Now, is my oil guy in trouble? No, because he didn't finance his oil drilling with debt. You know, so some people are doing really well because they saw this coming. So it's not the asset class. It's really understanding or looking behind the curtain, seeing the wizard. Right now is Powell and Larry Summers and these guys. I mean, they misled us totally. So am I going to cry? No.
So let's take a look real quick. So what happened? Let's take a look at the S&P 500 index. This is just for one day. And looks like, yeah, a little bit down, maybe a little dead cat bounce, as you TA people like to love to say. Let's take a look at 5 days. Oh, look at that, little bump, and then boom, crashes down. Take a look at a month. Comes down, comes up. Take a look at 6 months. Went all the way up here. December, January. This is when we start to figure out about the coronavirus. This is when we start to see that business start to shut down and just pumped and pumped and pumped and pumped. And all of a sudden, end of February, what starts to happen? Stimulus package comes in. What happens? It is a boom and a bust. It is a boom and a bust. And for me, I was actually thinking about getting into the stock market. Yet again, I haven't been in it for a long time. And I was thinking, there's a lot of good projects out there, a lot of good companies that are, will reverse. I mean, Boeing is one of them. Boeing was at above $300 and it dropped below 98. And I was like, yeah, that sounds like a good one. 3M would be a good one. Telecommunications companies, such as Zoom, which everybody's using right now, would have been a great one. But if I do that, I'm stuck in dollars. And right now, I don't trust dollars. I don't trust much of anything, as far as like the government, especially what's being printed. So for me, it is out of the question to do that now. Out of the question. There's only one clear path that I can see that is the safest path. And this is a funny thing because just 2 years ago, it was the most risky path, which was cryptocurrency digital assets. And I can just see it. I see it clearer every day, especially with the things around me. Let's move on. So the second to last piece is what Robert here talks about as far as what could be a good, not a good hedge, but the best bet for you moving forward.
So the futures market's coming down, the GLD price is coming down, the paper market's coming down, but physically you can't get anything on it. Why? It's because the rich are hoarding it. The rich are hoarding gold and silver like toilet paper and guns. The poor and middle class are calling their financial planner, and the financial planner is telling them to stay in it for the long term. And meanwhile, the rich are getting out. Wake up is my message.
Wow. And if I'm a small business,
And that's it. And he's right. Even though we talk about the spot pricing as far as like gold not really moving much, it's true. In my comment section, a couple people have told me that, look, I mean, that's just the spot pricing. But if you actually want to get physical gold, you want to invest in the gold, actual real gold or silver, you can't find it. It's not around. And why is that? Because they're hoarding. This leads me to my next point, which is what Robert talks about in his Twitter account. And he says it right here. Lesson 5, 1971 dollar debt became debt. Debt makes rich richer. Debt makes poor and some may poorer. If U.S. debt to GDP ratio is 60%, the world is sound. Actually, it's, about 60. Anything above 77 is bad. Today, U.S. debt to GDP 110% and climbing. This is April 2nd and climbing. U.S. bankrupt, debt, dollar, greed, destroying lives and world economy, very sad. Save or accept gold, silver, and Bitcoin. Now, in another interview that I had heard today, Robert talks about Bitcoin again. And he goes, look, it was by Steve somebody like that. Not the Fox News guy, someone else, Ducey. And he was saying, he said, what about Bitcoin? He goes, Bitcoin's a great option. He goes, Bitcoin, for the younger generation is going to be that magical piece or something like he said that. He goes, but for me, it's silver and gold. As time goes on, Bitcoin will become more prominent. That's just how it's going to be. He goes, if you're younger, he goes, then yes, that's probably your store of value or something like that, he said. But he said, yes, Bitcoin is that one piece to get into. And he's right. And everything he says is just correct. And I remember reading his book back in late 2000 after I got actually I was still in the military. And it was a real eye-opener. And I can just tell you, like, when you have something like this, just reaffirm what you believe, gold, silver, Bitcoin, sure. And I know we've trashed Peter Schiff more than we've trashed gold on this channel. It's just because Peter Schiff is just such a flamboyant, extroverted type of promoter. And I have nothing really against him. He's just kind of ridiculous sometimes. But he's right. Gold and Bitcoin, I think are the real store of value going forward. All right, last piece. So the last piece is, what are we going to do? What are we going to do? How are we going to get ourselves out of this? So let's take a listen here.
I used to teach just two kinds of people in the world, wimps and pimps. And a wimp will always say, where is my paycheck, sir? And a pimp will say, put it in my pocket, sugar. So you're either a wimp or a pimp right now. But the best way to be a pimp is another one of Fuller's generalized principles. He had a whole series of one was unity is plural, minimum two. There's no right and wrong. We don't have a right foot and a wrong foot. Without an up, there's no down, But the other one was the more people I serve, the more effective I become. And Brian, what you're doing is serving people. If you focus on that, you're doing what God wants done. And the more people I serve, the more effective I become. I'm not asking you for money. I'm not asking you to get paid for anything. I just want to serve people. And the information age, this brave new world we're entering, is we can share knowledge and we can share wisdom. And that's what you're doing, and that's what I do. So you and I just focus on serving more people, and we're doing what God wants done.
So the first part here, wimps and pimps, wimps first pimp, which is pretty funny. You got to ask yourself, what are you going to do? Are you going to let this just crumble around you? Or are you one of those people who go, okay, I know what I should be doing. So I need to do these things. I need to make steps. I need to make advancements, and whatever that is that you need to do to get ahead. That's for you to decide. It's not for me to tell you. I can just tell you what I am going to do, of course, is stay the course. I always talked about this before. Dollar cost average in, $20, $50, $100, $500 a week, or whatever you can afford is up to you. For me, it's a little bit different. Dollar cost average in, write it on the way down, write it on the way up, and sell during the bull market. And that's how I see things. I will not be getting in the stock market, even though I've been thinking about it. And I think the best strategy is just keep moving forward. And that's that. And the next part is serving people. And it makes a lot of sense to me. This is what I've been doing since as long as I can remember. When I was in the Army, a medic, got out, medic, then I became a nurse, then I became a teacher, and then charity foundations. It's the same thing. So for you who are listening to my channel, thanks, because it gives me purpose, gives me things to do, especially when I'm in quarantine. And I don't ask for anything. I never want you guys, and first of all, I will never ask you for anything. As far as like your information or something like that, those are all just scammers. But there is one thing I'm going to ask you for today. And I never ask for this, ever. But today, I think it's important. I'm going to ask you to like the video because it's gonna push out this to more people. I'm going to ask you to subscribe if you think that this channel is worth subscribing. I think it is, but I'm biased. And I'm going to ask you to share this video if you think that's going to help somebody else. And by sharing, I mean you can share it on YouTube, you can share it on Facebook, you can share it on Twitter account, wherever you can. But again, I never, ever, ever ask for these on my videos. This is the rare time. I may do it in the future, but it's a rare time I do it. And it's because I think that this one is one of the most important ones I've done. Especially if I'm going to save somebody from making a huge mistake who might be thinking about getting out of cryptocurrency or digital assets, or pulling their money and putting it into the stock market, because I don't think it's going to last, and that's just how I see it. All right, that's it. Thanks for watching the video. If you'd like to type, there's going to be 2 more that's going to pop up left and right. And that is it for today. Thanks. I'll see you